Today is Friday, June 3rd. Happy National Donut Day. I want to take a look at the markets in the post-jobs report world, where the number was the worst in 6 years. Pretty pitiful job creation. But that's fundamentals. Let's take a look at the markets for technicals. Right here we have the 30-year yield on the Treasury, and you can see that's a breakdown. So everyone's worried about interest rates going up, and the market just wasn't budging. And here, because of the weak economy, interest rates just cratering again. You can see that across the yield curve. I'm going to the benchmark 10-year. Same story. Don't know what that's doing there. Same story. It's maybe not as dramatic. If you like, perhaps you want to move the trend line. That's really up to you. But just look at this performance today. It's pretty lousy. Same for the 5-year and the 2-year. Also big down move today. Think about the 2-year and the 10-year together. The spread between the two is considered to be the yield curve, and that spread is getting tighter and tighter. It is now still at multi-year lows, not this low since 2007. And the flatter this thing gets, the tighter that spread gets, the closer to recession the bond market says we are getting. So it's not a good sign. All right, let's look at a few other things that are happening. Let's look at the dollar. And you'll see a pretty huge crater there. That is terrible. So this bounce off this support line, and I will admit that I have revised this support line down to capture what has gone on with this reversal bar here. You will see a reversal if you zoom in. So whatever kind of rebound was happening, it's over. And you can't say it's going to break the support line just yet, but it's a pretty good shot that it's going to get back down there. All right, other places in the market that are feeling the effects. Of course, let's look at financials. It's the XLF financial ETF. It's an arguable breakdown there. It's still a little preliminary for me, but the point is that this thing was going up based on rising interest rates, where the bank's going to make more money, and it's just not happening. Retail, it's been my whipping boy for the last month or so. One of the biggest losers today. So if the economy is not producing jobs, who's going to spend the money? There's my fundamental take on that. All right, so there you have it. Just we have a post-jobs market. Looks pretty bad. One thing, though, that's a little surprising is while the stock market is down, let's look at the S&P ETF. Really no technical damage at this point. Do have a double top here. Let's just adjust that slightly. Well, close enough. Do have a kind of a double top here, so that is a resistance area. Big resistance from in here in this big sideways range here. So I think that there's a lot of overhead resistance no matter where you are on the chart. So I'm not going to call any prediction here. Stock market as a whole is not doing too badly considering what's happening. But there are sectors, especially the bond market, which are feeling the effects of the bad jobs report. So there you have it, and good luck. Have a good weekend. We'll see you next week.